Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. Well, we had quite a bit of crazy action overnight. Let me come over here to the charts or try to be really quick about this. Treasuries selling off quite precipitously overnight, kind of at the beginning of the Asian session. They had kind of recovered since then, but now that, you know, the US markets are coming in, people are looking kind of scared, and you're kind of getting a little bit of momentum follow through on that. And we'll talk a little bit about like what that might be. S&P 500 did pretty poorly yesterday, and we are getting all of this craziness with like, it really looks like that it is like full-on trade war with China now. So not like last time here. Oil is collapsing further. Gold is actually moving up for once. Okay, that's pretty good. Silver not so much. Hapa struggling along with many commodities right now. Japanese yen. So we are seeing a lot of money coming into the Japanese yen, and the dollar coming down. So I think that that is also something really important to note. Bitcoin still struggling here, just above 76,000. Uzi says, "Why me?" Yeah, I'm sure that your treasury position's not looking so hot. Well, this is not that terrible, but silver's not bad. Well, I mean, the overnight move is just not as good as, doesn't look as good as gold, right? When you look at the gold chart, it's like, new swing high. I don't know. But the thing is, silver has been lagging. I think that's kind of the takeaway over there. Okay, so what is going on? Well, a lot of people seem to think that maybe China is selling off their bonds. I think that that is probably unlikely. Oh, I totally misread Octavius's comment there. Tariff Uzi 200%. Why me? I totally. When I read that, it read in my mind as like, you know, tariff. Chinese was pushing more tariffs. Yeah. Okay. Let's see here. Oh, I need to make sure that the news squawk is on here. Hold on. So we do have a 10-year note auction today and FOMC meeting minutes, okay? All right, so I do want to change the title here for the more clickbaity title. Is China selling treasuries? Question mark. Lucas says China is not selling. They would probably play their hand during the 10-year auction today and 30-year later on Thursday. Maybe. So I would say that it is unlikely that the selling is coming from China. So the action that we are seeing does not seem consistent with a large player consistently and steadily selling their entire position. What we've seen in the market is much more consistent with a disorderly liquidation of risky trades. So this looks very much to me like the basis trade blowing up. Okay. There haven't been any reports out there. Like if China comes and calls Goldman Sachs and says, hey, we want you to sell all of our bonds now, or, you know, because China's probably not going to execute that themselves. They're gonna do it through intermediaries, people with access to the U.S. markets, right? So if China was coming in and saying they were going to do that, like the desks would know and would probably be reporting it, right? So that's the first thing. The second thing is I would think that China would do it like sell their bonds and buy yuan or something like that, because the yuan is just like totally crashing right now, right? But we're not seeing that. China is just letting the yuan fall. They're basically like, let the yuan fall. That will help our exports and kind of give us a little bit more room here during this whole trade war thing. So I'm really just not seeing the evidence that it is China. Okay. Furthermore, I don't think that this scenario where China sells their treasuries really makes a whole lot of sense, honestly. Like, China has a lot of money tied up in bonds, and if they were to sell their holdings, well, first of all, it would take a really long time, and they would lose a lot of money on it. Okay, that is like a huge portion of their wealth. The whole part of the problem, I'm not going to say the whole problem, but a big part of the dispute between the United States and China is that China is worried that at some point the United States will not sorry, what is the word that I want to say? Will not repay its debts, right? China is concerned that the U.S. will not repay its debts at some point, okay? And that is like, if China decided, all out economic warfare, we're just going to sell our treasuries, the first thing that I would do as the administration is I would just completely cut China off from the market. I would say, hey, all U.S. firms, you're not allowed to do financial transactions for China. We will not repay Chinese debt, right? I would just completely cut them off. So they wouldn't even be able to get done selling it, right? And they would just lose all of that money. And that would be a lot of Chinese wealth. So I really think that if China were to do the whole like economic atom bomb kind of scenario, I think that they would be hurting themselves in the process, and I just don't think that it would be a very smart play. I know that it really seems like the internet has this fetish for some scenario where China sells their bonds, but I really don't think that it makes sense. So I think that what we're seeing is a basis trade blowing up. Now, this is a situation where I think that a lot of the classical ideas of economics and technical analysis will really lead a lot of people to make incorrect conclusions about what's happening, right? Because they're going to look at this and they're going to say, well, treasuries, they're showing some momentum to the downside
Order
now.
submitted.
And, it's staying there now. That must mean that the market has accepted that new price as the current official fair value price of things. No. Markets are not efficient. What you are seeing is primarily a factor of the liquidity and people executing. So you had a basis trade blow up. Somebody sold treasury futures. That impact is now permanent and will stay there until somebody decides to take it the other way. Maybe we will see some people come up and pick it up and trade it back up today. So don't fall for that one. Well, hurting us in the process, you think they wouldn't dare? Yeah, I think they wouldn't dare. Okay, so like the treasury market sells off because China is selling. China gets cut off from the markets. Federal Reserve steps in. Interest rates go back to where they were, and all that China has done is lost a ton of money. Like, I just don't see how that helps them. And again, like I said, even if they were able to sell all of that off, okay, What are they going to do with it? Okay, you've sold all of your treasuries. Now you have a bunch of dollars. What do you do with those dollars? Go and buy yen? Or sorry, yuan? Go and buy yuan? Well, then you're just bringing your currency back up, and that's not what China wants right now. I guess they could buy yen, but I mean it kind of seems to me like yen has become the flight to safety asset at the moment. Yeah, the flip side of the Fed stepping in, well, I'm still betting that they do. I mean, it kind of seems to me that the longer that this goes on, that the Federal Reserve is definitely like reluctant to step in and do anything. I think part of it is like, well, there could be inflation from tariffs, but I think that another part of it is if you come in and cut, you look like you're supporting the president in his trade war, right? But like if things are breaking, Federal Reserve has to step in. There's a point at which the Federal Reserve has to step in, or you just lose everything, right? I mean, look at the liquidity right now. They're putting up 500 contracts. That is something is about to break. With oil prices tanking the way they are, is there not a chance that tariff inflation will be offset to some degree by commodity repricing? Well, I would say that more broadly, there's a very good case that because of economic growth being hurt, that you will see broad-based deflation that, yes, could potentially counter the increases in goods from the tariffs. Yeah, Lucas says they stepped in 2020 for this same reason and had to bail the basis trade. But at the time, weren't the treasuries moving up? I think that one was different. So typically the basis trade is going to be like you own treasuries and then you turn around and you sell the futures, right? But it looks to me, so if you're bailing on that trade, then you would be selling your actual bonds, and or well, maybe you keep the bonds, but you just buy the treasury futures, right? But I don't remember how that particular bit was playing out. Yeah, but then you don't have to buy back what you sold. So like if it was that basis trade, then they would be buying treasuries, wouldn't they? So I don't think it's that. I think that the spread trade that they're making here is actually more like a spread between treasuries and like swaps. I don't know. So I guess perhaps I should say that even this scenario where it's like bonds are selling off because basis trade is blowing up doesn't completely make sense to me. I'm not saying that it doesn't make sense in like I don't believe it, but rather the exact mechanics of this trade are beyond my understanding at the moment. I do think though that if it was China, that desks would probably be reporting it. So that's the primary reason why I think it's not China. But back to the Federal Reserve, I find it really bizarre that nobody in the market seems to see these scenarios that people are drawing up as contradictory, right? Like, okay, we're going to get massive inflation, but we're going to have a recession. Like, okay, you can have inflation and low growth, But I don't think you can have inflation and negative growth. That just doesn't make sense. There'd be no money, right? Like, you're talking about a situation where, like, the money supply is contracting and we're going to have inflation. How does that work? Does not make sense. So you can't have it both ways. Either there's going to the market. One scenario is you get inflation because people continue to buy things, and it's really not quite as bad as it seems. And so in that scenario, the S&P 500 should eventually recover, right? But it will be like stagflation. So it'll be action very, very similar to like what we've seen since 2022. Or the other scenario is that this leads us into a recession, which in my opinion is the more likely scenario at this point. In which case, they're probably going to cut rates because they're going to have to print money. And I don't know if there's like inflation after that. So be it. I kind of think that what happens in that scenario is you have deflation, Federal Reserve cuts interest rates. Then after that, when the recovery comes, then inflation picks up, right? Well, at the moment, the treasuries have been rising, and a robot did take a long that it has about 5 ticks of profit on. On one part of me is kind of like, well, should I be taking a sim trade here? But I kind of think maybe that's pointless, because when liquidity is like this, it's dangerous to trade. It's dangerous to trade when liquidity is like this, and unless I think I've got like a headline or something. Yeah, the liquidity. I mean, when it was below 1,000 on Monday, I was kind of like, wow, this is not good. But what happened overnight really, really scared the market makers, right? Well, I don't really know what's going to happen. Obviously, the robot is long. I hope that they buy this back up and we get back up into the 111.16 area. But hey, somebody made 4 accounts of me and that's when was this? I did have to restart my machine yesterday. That's up and going and should be working okay. I'll just come in here and check real quick that none of them got through. Well, there is one from 14 hours ago. So if you get messages or friend requests from impersonators, the first thing I would do is look at whether they share a server with you. And if they are on the futures trading Discord, then tell me about it. If they are not, then that means that we've already done everything that we can on our side, and all you should do is report it to Discord. Okay. Oh, Octavia stopped out of that? Well, let's see here. Okay, so now the robot is down 5 ticks on that. Would you guys like me to put this over here? Nah, I don't like that. I'm just gonna leave it here. I do think we probably should be on the $3 Discord starting the room, huh? So let's do that. Stage. Start the stage. And I should remember to mute myself over here. Impersonator Seth. Okay, but on that drop, what was the deltas like? It looks like that there was a small and brief sell. So that's small enough it could just be noise, but let's just note that noise is really moving the market. There's very, very little liquidity out there. Okay, there we go. You guys, for those of you on the $3 Discord, hopefully we have that set up correctly. And I will keep myself muted over there. Yes, because sometimes I forget to shut the stage down. Actually, maybe I should just keep the stage going all day. But I don't want to be like broadcasting my mic all day. Spicy says I am worried. I think you should be. I like look. It's kind of hard to talk about this because like there's all the political implications and all of that. But I really don't see a scenario where like we come out of this unscathed. Like there's going to be positive and negative impacts from the change in the world economy that we are seeing right now. Hopefully, there are some good long-term benefits, but I think most of those benefits are probably long-term. And in the short term, there's probably going to be a lot of pain. And the biggest question in my mind is how much pain in the short term? Do we cause permanent damage? Right. But it could get to 20 cents. What, the treasuries? No. So a couple of more things on the treasuries. One, if we continue to see selling in these liquidity conditions, that would also, to me, be evidence that it is more basis trades blowing up rather than like China selling their bonds. China's going to want to get as much money out of their bonds as possible. And you're just going to be, you're just not going to get good execution with this liquidity out there, right? But if you're being forced out of a trade, if you're getting margin called, then they're going to come in and hit it regardless of what the liquidity looks like. So, for that reason, I would kind of expect this to chill out a little bit. Okay. Talk about Doge. Why? What do you want to know about Doge? I think that the person that originally made that comment about Doge, that he was really thinking in his mind doggy. So I think that it's probably should be pronounced doggy. But then apparently like the guy did comment on what he was thinking and that he really wasn't thinking about it like that too hard. So I suppose that any pronunciation of it is possibly appropriate, but it seems to me that the media and everybody else has really settled on Doge, pronouncing it Doge. So I think that the correct way to pronounce it is Doge. Fair enough. And Steffa thinks it's doggy. I mean, the first time that I saw it, that's how I read it in my head, but I don't think that most people are reading it that way. Okay, so I'm hearing on the news squad Besant saying that he will take the lead in negotiations with tariffs. And I think that the market is probably going to read that. Oh, actually, they already are. We're having a pretty good recovery. S&P 500 pushing up here. From what I've seen so far, Besant seems to be like the level-headed one. Like he was the one that traveled all the way down to Florida to be like we kind of need to change our tone because, you know, this could get so much worse and yada, yada, yada. So I think that that's why the market is kind of rallying there off of his comments. He's still speaking. You know, interestingly enough, the treasuries are rallying on it as well. So the market has kind of gotten into this mood where that's like, they don't necessarily know what's causing it. And I think that a lot of, well, especially the retail trader believes about why treasuries are selling and everything. They kind of maybe think that tariffs are inflationary. China's selling their bonds, like all of these sorts of things. And so de-escalation ends up being positive for treasuries instead of negative for treasuries. It's kind of a weird thing. That said, the treasuries didn't rally that much. I think that we're still break even, right? Yep, break even. Oh, spicy. You mean the cryptocurrency, Doge? Oh, okay. Well, honestly, I'm not. I don't like to make comments on specific stocks or cryptocurrencies like that, but we can bring up Doge and look at what it is and just kind of have a general commentary about it, right? Do you think that it could make it back to 20 cents? Well, what you're seeing, generally speaking, in this period, you can see Doge is selling, and you're seeing it sell off with the larger cryptocurrency market. So, cryptocurrency has really been behaving as a risk asset, and meme coins are kind of like the riskiest of risk assets. So, if we are to continue to see a weakening economy and trade war escalation and things like that, then I would say that it's most likely in that scenario that we continue to see cryptocurrencies sell off and Doge continue to decrease in price. On the split side, if like everything's okay and like maybe they make deals and this kind of all goes away and the economy recovers quickly, then maybe cryptocurrencies could return quickly, because there is going to be things like, like the administration seems kind of friendly to it. Another factor you got to consider there is Michael Saylor. I mean, there's been a lot of MSTR buying this thing, right? And the way that they've been doing that is they've been offering bonds, they've been borrowing money and then turning around and buying Bitcoin with that and everything. I think that it would probably be much harder for him to access the debt markets in current conditions. So he's probably stuck, and they go negative somewhere around 69,000. So uh, we're just another major sell-off in Bitcoin away from like maybe things getting really crazy over there. Angel says garlic. Oh, that's so funny that you remember I have garlic coin. That's the only one I still have. I think. Well, no, I take that back. I still have some Saya coin, I think. Oh no, we have to zoom out like way further than that. It's been doing okay during this sell-off. I think that it's kind of like it's been on par with the rest of the market, but really kind of just like garlic coin hasn't been doing a whole lot. Okay. Barr says that the bar for rate cuts is higher even with economic weakness. Is what he says. Traders see more than 60% chance that the Fed will start interest rate cuts in May. Okay, so Uzi is quoting Besant here saying Europe would cut its own throat by aligning with China. Oh, wow, it's moving up here. I think that this is more on Kashkari comments, but I'm not exactly sure which of the comments he's made here that they are rising off of. Near-term inflation will climb, purchasing power will go down, investment will likely be lower, GDP will be smaller due to tariffs. Announced tariffs are much higher and broader than expected, resulting in large economic effect and shock to markets. No Paul's monetary response up or down should be off the table. The first priority should be keeping long-run inflation expectations. I'm not sure I agree with that, actually. You know what? I don't think, I think that this is a really controversial thing to say, and I don't think that I have a very good justification for it. I think that this is kind of just more my intuition speaking, but I think that there are some situations where you should prioritize keeping the economy from blowing up and prioritizing employment and accepting that there will be a little bit of inflation and that you can't have it both ways. Because there could be a situation where like there is inflation. Well, like in this situation where it's like we have economy weekends, but we're getting inflationary effects from tariffs and maybe inflation expectations become unanchored. And in that situation, you have to choose between growth and inflation. And if you pick inflation, then you basically create a depression, right? Like that's kind of what happened during the Great Depression. Was they said, no, we need to keep interest rates down so that inflation expectations remain anchored and everything. And that was the wrong call. So that's why I think that there is a situation where the Federal Reserve would pick to address the weakening economy and accept a little bit of inflation. But with the caveat that they would not allow inflation expectations to become completely unanchored, right? There would be a point at which you would start to get hyperinflation and the Federal Reserve would say, okay, hold on. Well, the short-term news buying from Kashkari seems to have subsided, and they are pulling back again, so. I really hope that they buy treasuries today, but I think that it's going to be a little bit hard to get like that momentum started, right? Because I think that people's natural inclination is when they're looking at something like this, especially if they're not an expert in that market, is to assume that the current dynamics continue, right? So I could see I'm really concerned about a lot of retail traders coming in and being like, "Oh, China is selling, I should sell too." And like taking a really ill-advised trade. Cuz I'm not really sure if it's going to buy or sell today, let alone what it's going to do in the short term. I do have a position long in the treasuries because I think that broader that the Federal Reserve, that something will break and Federal Reserve will have to step in at some point. And that interest rates were simply too high before anyways. So they do need to come to a more accommodative stance. Because, I took that long before all this trade war stuff happened. But I'm really concerned that somebody would come in and be like, okay, let's short it, and then like the Federal Reserve does come in and do something, right? And you don't want to be short when that happens. So I think it might be hard for them to start some upside momentum. But if they're able to get it started and this kind of rise up here is a good start, you might see a lot of short-term traders kind of get stuck and have to flip around. So I think you gotta be careful because again, like there's not a lot of liquidity. So if you do get a move like that, like if there are trapped traders, it's gonna whoosh, right? When they come in and start covering, it's the liquidity is just gonna all evaporate in front of them. So I see a tweet here from Efficient Market Hype with a picture of Baghdad Bob. For those of you that are younger, Baghdad Bob was a guy that was a propaganda outlet for the Saddam Hussein Iraq regime. And he was like, we're not being invaded. There's nothing going on here. Like, as troops were entering into the airport behind him. So that's kind of like the way of saying like, oh, somebody's denying reality when we can all see what's going on. So he has that picture of Baghdad Bob with Comment from Besant, normal deleveraging in the bond market, nothing systemic. Okay, so, well, I am very concerned that what we're seeing in the treasury market could be something systemic, but the administration is saying that this is normal deleveraging in the bond market. I think that really strongly supports that it is indeed the basis trade blowing up and not Chinese retaliating by selling treasuries. Okay.
Target filled.
Okay, so it really had to fight on that one, but I think that our algorithm worked exactly how we wanted it to. Now, the thing that I think we got to watch is, does it go further? Because we keep having this thing where I'm taking an exit on it that I don't think is very good, but it keeps working. So we'll see if it works this time, or if this time is the time where like they just go much further and it's like, oh, why didn't you hold it? It's gonna happen eventually, right? Okay, so I want to go back to this comment that Uzi was bringing up from Besant. Where was it? Europe would cut its own throat by aligning with China. So, am I the only one that is kind of seeing this and the Europe's reaction to the whole trade war thing and kind of going like, So if you really believe in free trade, then the proper thing to do in a trade war is to not retaliate. The whole reason why the situation is as it is because we came in and we said, we're going to have a free trade. And when other countries put up protectionary measures and didn't have free trade with us, we just said, we're not going to do anything because we believe in free trade. Donald Trump sees that as capitulation and just letting other people rip us off. That's why he hates it, right? But that was the logic. That's how we got to the situation that we're in today. And what was the justification for that? Because free trade and globalism is better for us in the long run. Okay? So if that's really what Europe believes, why retaliate? Right? They are they're being Pharisees here. I don't know, it's the best word I can come up with here. They're directly contradicting their own philosophy on this. But furthermore, it really makes you wonder. So like, okay, the United States is unhappy with the trade. They propose big tariffs on everybody. Japan is like, well, we're not going to retaliate. We're going to work with you guys and make a deal. That's a bro. Japan. I feel that Japan has been real bros to the United States through all of this, regardless of who the US president is, regardless of who the Japanese president is. They have always done their best to try and be a good friend to the United States. And meanwhile, over in Europe, I feel like that every step of the way that we get absolutely unhinged responses that you'd seem extremely emotional and illogical to me. And I think that there are a lot of people in the United States now looking at this and being like, so why are we friends with these people again? Right? Like, we we've been supporting their military this whole time. We've kind of let them get away with a lot of different things, and really helped Europe a lot. And Europe has been saying, yo, you need to help us, United States. You need to help us. That's what's in everybody's best interest, is for you to help us. And then meanwhile, they're like thumbing their nose at us. Am I the only one that sees it like that? So when I see especially like Macron was like, well, we'll just expel all U.S. companies. Like, what? What? I mean, I knew that I didn't like the way that things were going in France, but I didn't know that it was that bad. And I really am kind of thinking, like, why are we friends with these people again? Especially if they were to like side with China. It's like, what? Europors can tolerate a whole lot more punishment than we can? Maybe. I never heard a statement like that in the European media. Over the weekend, Macron was saying things like, we could just cut off all US company access to the EU. Because people are absolute sadists. It really, I think that it may just be that, Uzi. Right? Like, okay, so like on the China tariff thing, or sorry, not the China tariff thing. My mind is working faster than my mouth today. Okay, on the is China selling bonds thing, the internet has this absolute fetish for it, man. Like, if you go on Reddit, okay, you come in and you say, oh well, it's just basis trade blowing up. Nobody cares. When the basis trade was blowing up during COVID, it really was not discussed that much. It was really something that only us financial geeks were like really paying attention to, right? But you say China's selling the bonds, all of a sudden everybody's super excited and interested in it, right? They literally have this fetish. They want to see China sell their bonds. I really don't think that it makes much sense that China would do it. But they all want to see it. And why? Why do they want to see it? Like I feel like it's this kind of saddest thing that like left-leaning folks have kind of like trained themselves to like want everything that's bad. Sadist. Okay, sorry. That, why I would think about it, that is not a word that I hear people say very much in real life, and I have probably only ever just read it and was saying it wrong in my head the whole time. Sadist. Sean says, have you ever taken someone off of unemployment or financial assistance? Pretty much the same reaction. Well, I think there's probably a lot of truth to that too, Sean. Like, we really have been giving Europe like a big help.
Order submitted.
You still haven't mastered anecdote, but we'll get you there. Thanks. Okay, it's taking another one. Let's see if this one works. I kind of feel like it's a little bit too far along. This is one where, well, I didn't add it, but this is one where I think that if we had the R filter on it, that it might not have taken that one. Adopting a simple look-through policy could be too... Wait, what's this? There is a case to be made that monetary policy makers should look through the inflation effects of a large consumption tax increase, since it could represent a one-time shift in the price level and instead focus on any employment reduction. Okay, so this is the argument that I've made, and the argument that I think I kind of got from Chairman Powell in the last Federal Reserve meeting. Okay, what does Kashkari think about it? That would imply a somewhat lower path for monetary policy, all else being equal, but context matters. Given the high inflation we've experienced in recent years and the risk of unanchoring long-run inflation expectations, I believe our first priority must be keeping long-run inflation expectations anchored. Anchored long-run inflation expectations have been foundational to the economic growth and competitiveness the U.S. has enjoyed in recent decades. Hence, adopting a simple look-through policy could be too risky for the economy, while market data for long-run inflation expectations have not moved much in recent weeks. There has been a sharp move upwards in measures of near-term inflation expectations that is important to watch. Once we are confident that inflation expectations are well anchored, we could then focus primarily on the traditional trade-offs between our dual mandate goals. Okay, so I agree with him here as well. I kind of agree and disagree with him. I agree with Kashkari that it is imperative that we keep inflation expectations anchored. So if we were to do something that caused long-run inflation expectations to become unanchored, that could lead to like hyperinflation, and that would be really, really super bad. But in the scenario that I'm drawing out here, I don't think that that's what would happen. I think that at that point, everybody would pretty much understand that we're going into a recession. So I don't, but it does perhaps give a good reason for them to like, not be doing an emergency cut today, right? Probably not do an emergency cut today, but I still think that emergency cuts could happen. So we'll see. Find a better way. Make this super small. Yeah, let's put it. Wait, can I change what it shows? Control center strategies. We don't need account display name. We don't need connection data series. Yeah, let's take parameters off. Sync, no. Okay. So we make it small like that. Now there's position and account position. I'm just going to disable account position for now. There we go. Grid font. Okay. That should be better, right? You can read that, maybe? If you're interested in seeing how the robot is performing. We did get a little bit more excursion long there, so that's good. Interestingly enough, we're not, well, yeah, but interestingly enough, throughout this whole move, we have seen the market order imbalance kind of shift back to 50%, but this particular leg has really started to get into like the 55% range. So why did which order column? I just removed everything that wasn't showing the realized and unrealized profit on it. I'm honestly kind of tempted to get rid of average price as well, simply because it does not display it correctly. It does not display the average price correctly on the bonds. It's giving it in decimals, which is annoying. Every time I look at it, that just annoys the F out of me. We basically got in at 22.5. I'm gonna retweet this with you know what? I shouldn't do it as like a retweet. Oh, I should reply to Nick Timoros' tweet. That was a good new high. You know, that's interesting. So Jigsaw has a new blog out today. I wonder who's doing that. I mean, I don't think it's Peter Davies that's posting all that stuff, but it seems like they've hired a marketing guy of some sort. But they're basically saying, like, there are situations where a human's discretion is better than the algorithm. And basically he pointed out all of the situations where they turn the algorithms off. And I think that that's a good way of presenting it. This situation right now where the market liquidity is gone, part of that is them saying, well, the robot could screw up and lose a lot of money here, and it's just not worth the risk. On the other hand, that doesn't necessarily mean that humans are going to get super great trades in that either, because part of it is just saying that there is just a lot of risk. But I have generally found that I tend to perform best in these kinds of situations. I think I explicitly said that I don't really know what it's going to do today, but I hope that it moves up. And the robot was taking the long, and so I said that's enough. Now I'm looking at it, I'm like, no, I wish that I had said, nah, let's have some balls and go long, right? But this is maybe a situation where I think that my discretion worked really well. Like, we understood what was going on, what caused the selling flow. That selling flow was likely over, and that we would probably see the treasuries rally, and we did. So it's actually it's kind of a vote in favor of like discretionary trading, but it's also a situation where I think that a lot of people without our understanding of markets would probably make the wrong call. Can you see how our more sophisticated understanding of markets that takes into account complexity and the inefficient nature of markets helped us there? I really think that if you want to trade, that's the first thing that you got to understand. And if you just understand that one thing, you have a major leg up on everybody else. Well, that said, we've got a long road ahead of us if we're going to like retrace the overnight move. So well, the liquidity in the micro isn't terrible. It's not as bad as it was a day or two ago, at least. We might have been able to have taken a live trade on this. It's still at 436. Wow, so that is bonkers. Oop, big move down. Yeah. I'm really tempted to take a risk, to be honest with you. I'm really, really tempted to take a risk here. But I can very much see that this is not one that I should mess with. Ooh, did we not get... Ooh, okay. Okay, well, so we did not get 12 ticks. So it did not take its profits, by the way. What do you make of the 100% tariff just announced on China? Well, so last time around, what we saw was a lot of bloviating and not a whole lot of action. That's kind of the thing that I remember from the trade war, is like they started it and they implemented some tariffs, but like things never really escalated, and it was just like, oh, we're going to have a deal, we're not going to have a deal, and they just talked back and forth and nothing happened, and then the election was coming up, so they dropped it. And this time around, Donald Trump was like, no, we're not going to mess with that, we're just going to go like full hog right from the beginning. So that's a big difference. So them putting a 100% tariff on China is, I think at this point, just kind of expected. So yesterday was kind of calm. I think that was kind of more of a liquidity is too damaged. There's not any news headlines, and so everybody took a breather. Oop. Trump is tweeting. He's tweeting, and he is just saying, keep cool. Okay. I feel like that I'm been pretty cool through all of this, haven't I? I don't know. I'm not cool on the inside. I'm not cool on the inside at all. On the inside, I'm screaming about how screwed I am. Anyways, so yeah, thanks, man. That makes two of us. So yeah, I kind of think that this particular escalation, I'm not necessarily seeing as much of a reaction to it in the market, because I think by this point we already kind of understood that the trade war is going to escalate into a full-blown thing with China. Now, I saw Besant saying, well, we should negotiate with countries individually, and then once we've kind of done that with everybody, then we should be able to approach China together. So that's what I always thought that the deal was. So like with this in the beginning, you know, Trump was going after Canada and Mexico, and people were like, well, why would you go after your allies first? And my thought was, well, probably they want to get all of those ones squared away first so that they can present a united front against China. But I think that what happened was Trump became impatient. Right? What has to happen for the liquidity of Xian to come back? Okay, well, so first of all, when liquidity becomes damaged, it just takes time. It just takes time. So on a regular basis, when we're just looking intraday, and there's a strong move that kind of starts to damage the liquidity and we get a liquidity hole, it takes about 45 minutes for that to happen. But we can actually measure that. It goes like this. There's a square root law. Oh, well, let's do this proper. My child stole the pen. Where's it? Oh, there it is. Okay. Oh, we should make it yellow. You can see, we'll see it better with yellow. Square root law. I can write square root law of market impact. Donald Trump on Truth Social saying this is a great time to buy. Okay, so the impact of an order of size Q is equal to scalar Y that is unique for each instrument times the volatility of the instrument times the square root of the size of the meta order over the volume executed during the time. So if you were to graph that out, I is the, sorry, let me give a little bit more space than that. So if we were to graph this, this is going to be I, and this is going to be Q, and it's going to look like this. It's a square root. So there's kind of like an upper bound. Okay. So after an order is finished, there is a short-term mean reversion period. Okay. And this follows a 3/5 law. Okay. So it is basically the same formula, but this is B. But instead of a square root, it's just to the 2/3 to the 2/5. Okay. So when you kind of do the math and turn it all around and everything, and you get 5 seconds and whatever, that basically means that it is 2.5. So when you're looking at like the effects of the market impact, this period tends to be 2.5 times this period. Does that make sense? Okay. It just so happens that in treasuries, that tends to come out to about 45 minutes most of the time. Okay. So if we come over here to the 10-year treasury and we start to say that this selling off of like basis trades blowing up started over here. Let's come into a chart. and drawing tools. Fibonacci time extensions. We go from here to here. Levels, 2 price levels, 100 and 250. But let's make this line a nice solid line green. That is suggesting to me that we probably won't have liquidity recovered until next week. So now I don't know if all of these rules apply the same, applying it to a daily basis. This is kind of very much theory because this doesn't happen very often. Okay. But what we know about the liquidity on short-term basis kind of suggests that we will probably see liquidity damaged like this for the rest of the week. Octavia says backwardation continues, not safe to buy equities yet. Oh, by the way, it looks like that my algorithm got out with only a 1 tick loss and then went short. So that's interesting. I guess I should say another thing that I have found is that the weekend often goes a long way towards recovering the liquidity. But I've also noticed this tendency for them to not change things until the new contract. That's another thing. So like the treasuries may just kind of be like, I think that we'll get back above 1,000, but I don't think that we'll be back to like full liquidity probably until we move to September possibly. First squawk, U.S. big banks fall as China slaps additional barriers on U.S. goods. J.P. Morgan Chase down 0.2%. Goldman Sachs down 1%. Yeah, my Goldman has been getting destroyed. Uzi says I'm missing some quality trades off the cost basis indicator into the 2-year because I'm nervous. Did it bounce? Because looking at it in the 10-year, it bounced off of the buy twice there. That the same sort of thing in the 2-year, or was there different setups that you got in the 2-year? Could you remember when was the time where treasuries were trading about 25% of the general liquidity conditions just based on bid ask? So I'm not sure what you mean by like 25% of the general liquidity conditions, but I think that the worst liquidity that I ever saw was probably the big quant crunch that happened in like February of 2018, I think it was. Or was it 2019? Bounced off the buy to the upside with a 2-tick MAA and currently 16 ticks. Oh, so it was on the other side. I gotcha. Well, that's interesting. So you're saying that while the 10-year was kind of fighting with whether it was going to get above the seller's cost basis, the 2-year was hard bouncing off of the buyer cost basis. Because I don't have a 2-year chart up. Yeah, they're flip-floppy. I really wish I had more ideas on looking at order flow between the treasuries, right? When we first started the stream, I had some things like I had a cumulative delta that kind of showed you like a net cumulative delta with the spread, but I didn't really feel like that really did anything. But there's got to be some way to like separate the volume that is coming in probably because of outrights and the volume that is coming in probably because of spreads. It's got to be something like you compare the orders between the two instruments and the buys and sells and see like what percentage of the flow is this, and then something along those lines. Well, meanwhile, the algorithm did go short, but it's didn't not get a whole lot out of it. This type of market, I see that the iceberg hold with absorption, not like before when the market are calm. How's that happen? Well, I have not really noticed a whole lot of icebergs, but these market conditions, you know, it's easier and more likely for them to bust through the icebergs and continue through. Largely speaking, trying to look at the icebergs and take entries based purely on the icebergs is not a very good probability trade. But if you are kind of expecting a player to come in here, and this is where, you know, if we weren't having all of this craziness today, that there is a 10-year auction today would be a really good opportunity to watch for these sorts of things, because those icebergs tend to be used by like more passive players that are just hedging and so forth. And so if you're expecting somebody to hedge and you can see the iceberg out there, then that can be really, really valuable, right? But just an iceberg on its own that you're not expecting, I don't, there's not a whole lot that you can really glean from that, unfortunately. Right. The issue more broadly is all orders have impact, regardless of why they're being executed, right?
Order canceled.
Okay, now it's going to come in and it's going to go along. So the algorithm is kind of getting thrashed around both ways as the treasuries push pretty hard both ways. So it is doing what we want it to. That it's only down $10, that's not bad. So let's just let it do its thing. I did do a little bit of testing the other day to be like, okay, if you just took a trade, you know, have a refactory period. Don't let it trade again for a while. But that didn't work very well. So I feel much more comfortable with the algorithm being long than with it being short. I kind of didn't like when it turned short. I mean, I saw why it was doing it, but you know what we could do? You know, this is what we should do. We should add a second market order imbalance, a higher time frame market order imbalance, and say do not go short if the longer run market order imbalance is below 50. Right? Because basically what happened here was it took a counter trade. which is I don't want it to do that. So the way that you prevent that is you add a higher time frame. It sure is slippery though. Like that was a pretty good shove up to the highs. They've already pulled back considerably. Is that algorithm downloadable? I think I included it in the last release of my indicator package, but it's really simple. Let me pull up the editor here. Where is it? Oh, here it is. So basically we add my market order imbalance indicator, and if we cross above 53%, well, 50 plus the deviation trigger, but we've set it to 3. Why is it 5 up here? Oh, well, whatever. We've set it to 3. Then it goes long, and if it gets below 47, then it goes short. That's it. And then the way that it's handling exits right now, we really don't have a good exit. So we have a time-based exit. If it's been in the position for an hour, it will exit. If it makes 12 ticks, it will take a profit. And there's not a, well, actually, I think if you get 12 ticks to the downside, then it does take the stop. But it seems to me that most of the time when that's happening, you get enough of an impulse that it flips around and starts going short anyways. So usually it flips itself before it gets to that point. So that's how it's working. And we've back tested it over the past 3 months because that's as much data as we have. The indicator collects data. So that's how long we've had it on. And it's been pretty effective, but you know, it's been doing really well in a particular environment. I've also been finding that it's been performing better as we trade it live than the back test, which is kind of weird. But you know, whatever. That reminds me, it was somebody on TikTok the other day, and they were like, "Oh, I have like this, you know, I've been doing sim trading on Forex or whatever, and doing it for a while, and like it super worked really, really well, so doing something." I was like, well, not necessarily. It depends on their stats. And they're like, no, my stats are like with 76% win rate and 3-to-1 risk reward. And ChatGPT says that that's like super, super good. And I was like, I didn't have time to look at it, but I was like, that's not good. Let's see. What did he say? 72% win rates. 72% win rate with 2.3 RR. So that says to me risk reward. So that means that it is actually 1 over 2.3. So 1 divided by 2.3 plus 1. So 1.434. 1 divided by 1.434 equals 0.697. Okay. So it is profitable by a margin of 2%. That's not that good. So that is probably a strategy that's not factoring in fat tail. This will be one, two, three. This will be the third trade where it's taken one and then the flows have kind of flipped out around on it. Any insights into swap spreads? Unfortunately, I can't really see that information very well, but I have been seeing them mentioned a lot in reports. And generally speaking, there does, like, part of this blowout in treasuries does seem to have something to do with the swaps. But there's also kind of seems like credit swaps are like, credit swap spreads are kind of like getting wider. So I think that they are kind of suggesting that this is not good and that something could break.
Order canceled.
Now it's going short again. So, you know, the real way I think to avoid this problem that we're getting is look for a larger deviation or a larger imbalance, but then it will get into the trade later, right? And you don't get as many trades. So perhaps we could filter it. You know, well, I was looking at R squared, but we could also look at, well, I don't know. If we were using the R squared filter, then it probably would have taken this first trade that worked out really well, and it would have ignored the rest of these. Can you filter it? Well, so how would I filter it with cost basis? Only take a long if we're above the buy side imbalance? or sorry, the buy side cost basis. This one is a little bit wild because it got an imbalance short and it is shot back up. Without, by the way, the imbalance flipping back up. I'm just thinking, like, I have said that as we've been backtesting this, it's performing better than I expect. And maybe that was just due to market conditions. Now I'm kind of wondering, okay, so now that we've seen one of these situations where it does really poorly, or at least where I don't like the way that it performs, is that more common than I realize? Is that common enough that, like, filtering it out and everything is really worth it? Or am I just extrapolating too much from this particular instance? And if I go and I apply filtering and so forth, it's going to filter out so many trades that it doesn't help you. Because more broadly, when I look at the cumulative delta in the Treasury, right? Like we got a big long, but this has basically been the whole area that we've been having problems with. And cumulative delta has been kind of wonky both ways. Oh, do you advise me to take a funded account in this market condition? Oh, geez, man. The thing is you could pass a combine so easily. Yeah. The robot would have passed a combine, or sorry, a funded account on Monday. If it was trading 3 contracts, it would have just straight up passed it. At the same time, you can blow it really easily. So it's kind of a risk. Like, the thing is, I'm not really a fan of funded accounts anyways. I believe that they're mostly just kind of preying on people that are being fooled by randomness. And they make their money from people that from people failing, essentially. They make money from people failing. I don't like that. Their incentives are misaligned with you. But you have like a 1 in 3 chance of passing anyways, as long as you don't overtrade. So I what would make this really volatile market less likely for you to hit that than any other time. It just means that you will pass or fail the funded trader program more quickly, is all it really means. Now, if you really have an edge, then it depends on whether your edge is good or in this market or not. So I recommend that you focus primarily on the news and informational inefficiencies, because the market is more statistically efficient than it is informationally efficient. And so from that perspective, this is a time where you can have a big advantage. It's just Is the advantage overcome the amount of risk that you have to take on to play? For me, most of the time, no. But if you're trading a funded account, then that kind of minimizes the risk on your end. Why not? Why not? Okay, well, this short did come through, but it's pausing and coming back. I don't know if this is going to hit the target or anything like that. I'm surprised that it did not take a, that it didn't hit the target. Yeah, I'm really frustrated that in my own trading, I've done really, really well with exits lately, but I really don't know how to automate that, nor am I sure if that's appropriate for this particular strategy anyways. And so you come back to this, like you can have a set target that kind of makes you really more at the mercy of the volatility or the time exit. I don't know. I'm saving as much as I can from my job and work 12-hour days summer so I can leave. Wait, which doomed continent do you live on? It's kind of like, it comes back to this thing that's like, isn't everybody kind of screwed? Oh, Europe. Okay. Yeah. You know, I suspect that TikTok, it does things that are mostly trying to make people disillusioned with the United States. Like, it will show me these people that are like, oh, I live in Europe now, and there's no way that I would ever leave. And I'm like, why is it showing me this? Oh, only 2 of your 3 above comments are live chat. Yeah, sorry, I only have it on top chat. Europe acts that way because they are literally commies that want to control and enslave Europe. I don't think that that's the case, actually. There is a strong amount of left-leaning sentiment, socialist sentiment in Europe, but it seems to me that in Europe, that, oh man, I'm gonna say something controversial. I'm kind of questioning if I actually want to say this. Yeah, I'm gonna say it. I'm just gonna put the, you know, that this is kind of a controversial take. I'm not like, you know, fully, what is the word? Like dedicated to this line or this argument, but it's just something that I've seen in Europe that I think is going on in Europe. Okay, it seems to me that in Europe the aristocracy never died out, that the rich people, the royalty, and the kind of rich people that were kind of controlling the royalty are still in power over there, and they have simply found ways to continue to control everything by controlling democracy and just kind of like setting things up to work in a way that always favors them. Which is why it's like when somebody comes along and starts to challenge that status quo, we're going to ban them from running for the election. Or if they go and they win an election, they just straight up overturn those election results. So, and I think that the kind of the liberal communist sentiment is just one of those things that the elites in Europe use. And so like what I see here is like, again, with Europe with the comments that Europe is making and everything. And it's like, well, how can you really say that you're our friends if you're going to react that way to things? Well, the reality is, I think that they never really were our friends. It was just a relationship of convenience because the royalty were able to use it to their advantage at the time. So I kind of feel like that's kind of a little bit conspiracy theory. So I'm not going to say that like I fully believe that that's the truth, but that's kind of my leading theory for why you see Europe react the way that they are. I don't know what the hell is going on with YouTube. I get 0 recommendations from people I'm subscribed to. Yeah. But it's been like that for a long time, Octavius. The algorithm does not factor in whether you are subscribed to something into whether it shows it to you on the front page at all. That's really what it's about. What is with all these people coming into the server trying to spam Steam? I think I can fix that though. Let's see here. Auto mod. So here I can add more, right? Yeah, here we go. Let's see if that helps. Let's change some things. Let's see here. Yes, bro. Literally, at least in the US, I can buy something to protect myself. Here it is illegal to carry pepper spray. Hey, at least here, if you get shot, the person who shoots you goes to prison for long. Oh man, dude, I don't even want to touch that one, but I totally feel you there. We in Europe are very diverse. Your hypothesis may be partially true for some parts of Europe, especially for those who suffered from socialistic occupations of old Russia in the 50s to 90s. I take your point, more inclined to believe it's a globalist agenda. Well, yeah, I kind of feel that the royalty in Europe kind of like hijacked the globalist agenda. Yeah, that's kind of exactly how I felt. Just don't live in California, New York, Washington, or DC. Parts of Europe, for example, Western Germany, France, Spain, etc., are very Western-oriented, open for democracy, etc. Also, Poland is very open. But I mean, France is the worst offender right now, I feel. It's up to the U.S. at this point to maintain friendship relationship with Western-oriented European countries. Well, like, so again, I mean, the whole thing, I think you missed this earlier conversation, Frederick, but like the whole reason that we're talking about this is we're saying that it really doesn't seem to us like that Europe really sees themselves as friends to the United States, that it was always a relationship of convenience for them. Japan is acting like a country that really views the United States as their friend. And when a friend comes to you and says, I'm really unhappy with our trade relationship, they go, okay, well, I'm not going to retaliate. Let's just see what we can do and work something out. And that's also in line with somebody that really believes in free trade. If you really believe in free trade, then when somebody puts a tariff on you, you don't retaliate. That's why the United States hasn't retaliated against all of the protectionist measures that pretty much every country takes, right? But Europe, who claims to be, in line with the globalist free trade agreement, when we put the tariffs on them, they just lose their absolute minds. And their reaction really suggests to me that they just never liked the United States in the first place. That it was a relationship of convenience, that they've always thought that they were superior to those stupid Americans over there, and that they don't acknowledge the help that the United States has given them at all. They kind of resent it, and they resent that the United States has done better than them economically because they're so stupid and all of these sorts of things. That's what I see. I just don't really, at this point, I'm having it hard to see, like, okay, yeah, you want to have relationships with everybody and you want to have free trade with everybody and things like that, right? But we don't have the same relationship with all of our allies, And I think that everybody has kind of held Europe as like really truly close allies. Like there's something more there, that there is like, that we're more than just friends, right? Like you have like your acquaintances, and then you have your friends, and you have your best friend, and then you have like family and your spouse. And some people have always been talking that like the US and Europe are like spouses almost, and that's the kind of relationship that they should have. And what I'm seeing is Japan is treating us like a spouse, but Europe is treating us like an acquaintance. The French are very special in many ways. They come around like the worst offenders, but you need to keep in mind that they want to maintain liberty for them. I mean, I don't think so. How do they maintain liberty? By kicking out all U.S. companies out of Europe? Because that's what Macron was saying on Monday. I don't think Europeans would think about the U.S. as stupid. Also, not the elites like you suggest, but the elites think of the U.S. as hard to rely on because things change quick, which makes it, well, that's true. Well, yeah, we still have a dynamic back and forth system. We haven't been corrupted into a uniparty, predictably, politically like Europe. Yeah. This is exactly why I don't like the parliamentary system. I think that the parliamentary system is ineffective. And everybody always complains like, oh, in the US, there needs to be a third party. I wish things were more like Europe. Yeah, because the way that it always works out in Europe is the socialists win. And once you kind of turn it into there's only two sides, then things work out the way that that is effective. And if the United States had a viable third party or like a parliamentary system, I think that it would probably turn out exactly the same as it is in Europe. Because more broadly, if you look at like what does Seth tend to believe, Seth will trend towards believing that the way that the system is set up leads to certain outcomes. Right? Most people are just thinking, well, it's what people believe at that time, and if they start to believe this, then it will go left, and if they start to believe this, it will go right, and yada yada. I don't see it that way. I think that the way that the system is set up has a large degree of why people end up believing what they do. And the European system is set up in a way to kind of advantage socialists. And again, I think that the global elites, that they don't necessarily want socialism, but that they're totally okay with that because that helps them. How much does this come back? 20,000. I should probably recenter my DOM here. They want complacency. Well, I mean, just think about it here in the United States, right? Who are the ones that are supporting globalism? Is it the capitalists or the socialists? Why is it the socialists that are the most free trade? Yeah, they want people who will sit back and let them do whatever they do, regardless of how much it hurts. Yeah. Right. They want a system where they can basically do whatever they want with their money. They can siphon money off from the United States or wherever else in the world, and nobody questions or does anything about it. And they don't really care so much about whether it's socialism or they are not so ideologically based. They're primarily about the thing that advantages them the most, as most people are actually. Quite frank. I mean, the larger thing I'm pointing out is that people tend to behave in a way that will advantage them first and foremost, and then they use ideology to justify the decision that they've come up with. So this also explains why Trump supporters are the way they are, because if we're Republicans, the traditional Republican thing of things is kind of a little bit more libertarian, and they were the ones that were pushing free trade in the 80s and things like that. Why did that change? Well, because the Republican Party started to become more working class. So they are doing the thing that they think advantages them, and using ideology to justify it afterwards. I'm half German, half Polish, and I worked in the U.S. From my experience, Western Europeans in the U.S. get along really well, and culturally, they are very similar, right? I mean, I think that the counter to what I've said, I don't feel like that you guys have argued that the other side very well. I mean, there's only like one person that kind of tried to argue the other side. So I feel like that I'm gonna argue against myself. Okay. I think the split side of this is Europe is just trying to give themselves the most leverage that they can in negotiations with the United States. And so they are responding to crazy unhinged stuff from Donald Trump with their own crazy unhinged things. And that what Macron is saying is not really reflective of anything about how Europe views us, but is rather just bluster to prepare for negotiations. Right? That I think is probably the best counter argument to what I'm saying. Kind of seems like there's a little bit of support at 21, but I'm not actually seeing any explicit, like, nobody's decided to go for it. It's just kind of come down here and kind of going sideways. So I actually kind of think that really what's happened is there is a liquidity hole from 21 to 25, which is a really broad range. US doesn't need to bring freedom to Iran or China. They just need to bring it to Europe. Why don't we bring freedom to Canada first? I really do hope. So the thing that I saw today that really gives me hope is Besant saying, well, I'm going to be the lead negotiator here, and we want to get these deals with individual countries done so that we can present a united front to China. That's what I thought this was always about. I must admit that I was quite taken back by how this tariff thing, like Liberation Day thing, went down. The formula that they used and the way that it all happened, it was just like a really terrible rollout. It really looks to me like they chose a way of doing this that would basically maximize people freaking out. You know? So I hope that that was really just about getting people to freak out so that you could negotiate better, and not just, you know what, actually, maybe Donald Trump just really likes tariffs and wants there to be tariffs. I kind of feel that if Donald Trump really likes tariffs, that we should have a tariff policy that is like long-term and actually makes sense. And the rates that we're going to charge people, I don't think really makes sense on a long-term perspective, you know? So I'm hoping that it really is they're going to negotiate. And then, yes, that we do present a unified front to China, because I'm really concerned about what's going on with China. I think that China is exploiting the Western world to build themselves up. And once they think that they have all of the power, they're just going to switch around and go full communist and try and impose it on the rest of the world. That's what I think they're doing. And I don't think we should play along with that. How do you deal with that without harming yourself more with the trade policy, you know? It seems like, again, like we were talking, I think I've said this every day, I see some, like, what I would call intractable problems. It's like, we know that there's a problem, but I don't really see a viable way out of it. It's just like with me and unemployment. We've been trying to get a new day job for 6 months. The resume is good, I think. I've had a lot of interviews. I don't know if I've really found many roles that were really, really super well suited to what I had. So it wouldn't surprise me that there would be other people that like worked at a Google that would get hired instead. This is a very, so I don't think that I'm doing something wrong in interviews, but I have had two where it seemed like it went really well and I expected them to hire me and then they didn't, and they reposted the role. What can I do? Especially if there's going to be a recession because of a trade war. Unemployment has run out. I am living on charity. And I don't really see an easy way out of this. I just have to continue to apply and interview as much as I can and hope that it works out. And we spent a lot of time trying to, the Top Towel, they just put me in the queue, so I wouldn't expect to hear anything from them for several months. But and we tried to build up the YouTube channel, but that just doesn't seem to have worked. I have been in my free time because I just don't feel like making videos right now. I made all the big videos that I wanted to. I told the video editor I can't pay him anymore. If there was anything that I would make, it would maybe be like a weekly recap or something like that. But I'm kind of finding like, okay, I think that there'd be a lot of content today, this week. It would be good for a weekly recap, right? But I'm not keeping track of things enough. I just don't see how I would do that. So I've been spending that extra time while I'm definitely studying for interviews, but I've been spending more of the free time writing a book. Like, I'm thinking I'm gonna write a book and I'm gonna put it out. I'm gonna sell it. I always fought against that idea when people ask me. Because I've always felt, well, the best education is the market, and like everything that you need to know, you should be able to find it online. But what I'm starting to realize is that it's not really practical for most people to do that on their own. They're just not going to find the information. They don't know what to search for. They don't know what to look for. They don't have the advantage that I did of working on Wall Street for 6 years and just being absolutely obsessed with the financial news and consuming as much financial content as I can for decades, right? That's not most people. And so when they come in and they're going to learn from the market, they don't stand a chance. They don't have enough information to understand what's going on. So it needs to all be collected into one spot. But then the other issue is that there is just so much content out there that is complete garbage. And because those other content creators basically have like marketing campaigns and tons of advertising cash behind them, our message just gets buried in the noise. It's not very competitive. So I think that I have to make this resource and sell it so that I can use the profits from that to turn around and do the things that would get us more attention, like advertising, and also like, taking really big risks and trades so that the people that are just only attracted to, who's made the most money, that they will also take note. And I wonder, have I come to that conclusion? Because that's really is what needs to happen. And that really is what would be best for the world and for the trading community. Or is it because I'm at the end of my rope and that's like the one thing I can think of that would maybe help me? But then I think maybe probably not, because this is going to take a long time, and probably by the time I put a book out, I will have already been working for another job. I don't know. It's really starting to weigh on me because like a lot of the companies that I've got lined up right now, it's pretty grueling interview process. I just really don't want to go through all of that and then not get anything for it again. That just is really soul crushing to me for some reason. The idea of having to just, because like I'll crunch and I take the test and then I'll just absolutely crush the test. And that's always been the way that it's been. I'm always been a good test taker. And, I never had this experience of studying really hard and then not making it. Sucks. But then also most of the companies that or opportunities that have been lining up are ones that don't seem to jive with the stream very well. Ones where like I'd have to work on site and maybe be there by 8 o'clock, and so we would only be able to stream for like 30 minutes, or where I'd be working for a bank and they would probably limit what I'd be able to say.
Order canceled.
Interesting. Okay, so the robot took profits on that because the flows flipped around, and we are starting to get some beginning signs of an imbalance along. We'll see if it persists. I'm kind of concerned that it will just fizzle out here again. Although, if we were going to have like another leg of meta order, it's been over an hour, so it could maybe have another leg up. That's possible. Let's see here. If you want to make income quick, you should get into AI agent automation and offer to implement an AI agent for a company. For example, using N8N, call any company and tell them you will reduce support costs by automation that pays for itself. Yeah, so you know what? I am not really all that enthused or impressed by AI agents. So I've seen two things happen here over the past 3 months. When everybody came out and were like, this is the year of AI agents, okay? Number one is that all of the AI agents that I've seen are completely incompetent. They are just not accurate enough for real world use. Even doing things as simple as, like open a spreadsheet and do stuff on a spreadsheet, it's just completely incompetent. A lot of people seem like they feel like they're having success with coding, but I've also not done too well with the coding side, but maybe that's because I need to pay for a GPT on that side. So the agent hype is kind of fizzled out because it doesn't seem viable yet. But then the other thing that I've seen is that companies have pulled way back on the investment. And so companies are not just going to invest in something because it says AI anymore, right? Like it has to make an immediate return. If it doesn't make like an immediate return, then they're not interested in it, right? So I kind of wonder what could I make that would have an immediate return like that? Like, that's the issue. Is like, okay, so I think I actually have some pretty good ideas of things that I think would be a really good platform and a really good money-making opportunity. But it's not something that you would get an immediate return on, right? It needs to be something that like I can put a weekend of work in and then people would be literally making money from it. And that's not the case. So we're talking about something that you put in 6 months to a year worth of investment in, and then it's a better platform than the one that they have today. But that doesn't necessarily make them profitable traders, right? So it's not an immediate return on capital. so I've never heard of N8N. What's that? Powerful workflow and automation. Oh, well, that sounds like something a little bit different. Plans and pricing. $20 a month? 5 workflows? I guess what I should be doing is I should be making... I think the thing that would be the most likely to make big money right now would be videos about the current situation. I've kind of been hesitant to make those in the past because, like, they don't last very long, you know? Like, yeah, actually, I don't like that idea. Because it's like you get a ton of views, like, the first week, and then it's, like, not relevant anymore. Nobody watches it, right? We've done that on YouTube. We've had videos that, like, yeah, they got a lot of views when I first put it out, but then the views on it completely dropped out, and it didn't, I to some extent, maybe it hurt the channel even. Oh, you can host N8N locally for free? I think you operate in your known parameter. I think that's true. I think that the ADHD medication that I take kills the creativity and impulsiveness. But again, I was just saying, so, like, here's something that I haven't done, but then I was like, actually, no, I have done that. It was just a while ago, and it didn't really help. Right? Mm-hmm. But it's kind of hard to get around the issue of the labor market is just really, really bad. There's not a lot of money available anywhere. And the YouTube content that we've made so far just fails to splash. It's like I build this big, huge behemoth that's like, I've figured it out, guys. This answers all of your questions about trading and yada, yada, yada. And I go and I put it up there to drop it into the water. And instead of, coming down and going, whoosh, it just goes right down to the bottom. Is it, you people don't like to be told what they need. They tell you what they want. So what you're saying is I should become a fair value gap expert. Work out the whole day. Dude, so one of the issues I'm having is that, okay, so something interesting I've learned about recently, and there was a Kurzgesagt video if you want to watch about this, but they kind of been found that the human body just picks like a certain amount of energy that it wants to consume in a day, and so if you do things like you eat less, then it just adjusts. It's just like you don't move as much throughout the rest of the day. Like if you exercise, then you just don't move as much throughout the rest of the day. So like one of the things that I do is my legs are just constantly bouncing, right? And if I'm working, then I'm not doing that as much, and I'm not burning as much energy, or I'll just let myself be more cold, or like the body adjusts in those ways. Okay, and so one of the things that the body does is like, if it has the extra energy. Like you don't exercise enough, so it's not burning those calories from exercise, then it turns around and it does things like it creates hormones, right? And And that's why a lot of people get depressed, is like they need to expend more energy so that their body is not making all of those stress hormones. Well, being on unemployment, my wife is working she basically is working every weekday now, except for today. Today is the only free day that I get this week. It's hell. And by the way, she works in a job that's like, you have to be gone all day and you get paid shit. She's a flight attendant. And so I'm watching the kids. I'm like the only one watching the kids. And so I cannot just go out into the garage and do a 90-minute workout. But instead of it giving me anxiety and depression and things like that, it seems that my body instead does weird things like I sweat more. I will get really hot at night and have a hard time sleeping, things like that, and just otherwise get restless. So like, I need to be doing more working out than I'm getting, and I've been compensating by doing things like taking the boys into the backyard and sprinting. That's something that's worked well. Just doing burpees in the room, because I can't just straight lift weights, So I've been trying to get more exercise. But I've found, and maybe part of this is the medication, like if I start to feel depressed, I jump right out of it. And the thing that makes me depressed is when I think that an opportunity is going to work out and it doesn't. You need to put ICT terms buried in the description of your streams. That'll get you higher views. Yeah, can I put it in the... Well, my understanding is that the tags don't do anything. That YouTube no longer looks at the tags. Could you put it in the description? I don't know if putting it in the description does anything. Titles, sure. But then I think that what happens is that YouTube says, okay, this content is about fair value gaps. So I'm going to show this to people that are interested in fair value gaps. And then the people that are interested in fair value gaps watch the video and they go, well, this guy doesn't think that fair value gaps work. So they stop watching it. And then YouTube says, well, I'm not going to share this content because it doesn't seem like viewers like it. And that's what happens. So I kind of think that there has to be a balance for it, right? Like, if I were to just go out and create garbage content that I think is what retail traders want, it wouldn't be very genuine, and I don't think that it would do very well. So we have to find a balance between what is going to actually help people and that people want to watch. And I have been unable to find that balance. Been unable to find the thing to latch onto that'll do that. But at the same time, like it really seems to me that the thing that viewers really want the most is to be given promises that they're going to make money, or to watch somebody make a ton of money. That's really what they want to see. And well, I could take big sim trades, but nobody's gonna care about that, right? And I'm not gonna lie to people. So that's kind of why I've kind of come to this place with the YouTube channel, where it's like I have to understand that all of the content that I'm making is because I want to make it, and because I think that it's the best thing for my viewers, and not because I think that it's going to make my YouTube channel blow up. Because to make the YouTube channel blow up, I would essentially have to do something that is dishonest, and I will not do that. So I have to just basically give up on the dream that like the YouTube channel is going to blow up. It can still happen. But I think that the change that I've made in my approach to this, because I've always thought, you know, eventually it will. Eventually the algorithm is going to catch on and it's just going to go. But I you know, had 6 months to make as much content as I could, and every one of those videos I tried to have things in there that I thought would make the video hit, and it didn't. So I mean, I'm open to ideas about what kind of a video we could make, but that's just kind of the shift that I've made. For you guys, it doesn't change anything because we're still going to be here every day, and I'll still be making videos as I can. It's just not going to be as much of a priority, nor will it be done with the intention that like I'm going to make money from it. Which basically means like it will go back to what I was making before anyways. I don't know if it's that much of a change in my content. I did really try with these ones to pick topics and ways of presenting it that I really thought would be the best for the algorithm. But now I'm kind of like, you know, like the videos I made about the indicators. Those ones I don't expect to do super well in the algorithm, you know? That's okay. I'll probably make a lot more videos like that. I remember a video of an old man saying that if you're depressed, just work as much as possible. You don't have time to think about being depressed. Yeah, that would be great if it was like, if my job wasn't watching children. Okay, well, make a video about scalping, but with nice clickbaity titles. What would be a good clickbaity title that you think we could make? Because I think I've made just about any kind of video about scalping that I think we could make. Right?
Target filled.
Okay, cool. So, the robot had a few missteps, to like a few fake outs today, but in the end it worked out pretty well. 231, that's not bad. Times that by 3, $700, right? I think that if you were trading a combine, you'd be happy with that. It took a lot of trades too. That's the bigger thing, is we kind of changed this because we wanted it to take more trades. And I'm pretty happy with the changes that we've made so far, at least so far. I kind of think that in normal conditions, we couldn't expect to get 12 ticks, right? So in different circumstances, or maybe we can change it so that like that target is based on the ATR. I have so many ideas actually now. So there's this kind of model that I was, Jean-Philippe posted about it on his LinkedIn, but I don't think that he was the one that did it. And they were basically showing that that volatility is like path dependent. So basically they used machine learning to show that like how much volatility you get is basically like you take the volatility of the day before and then the day before that. And each day you're timesing it by a scalar that's slightly smaller. So that the further away it is, the less it factors in. And so that would be a better proxy than ATR. Because it would bias it towards the most recent volatility. So I could make I could possibly use that model. There's some machine learning stuff in there, and so I don't know how to give them that in NinjaTrader. I think that it would just have to be like embed the weightings into the indicator. You know, do all of this statistical work over here and then just embed the weightings into the indicator. But then I could use that and use a percentage of that to determine what your target is. That would probably be better.
Order submitted.
It's going to go again? Oh, yeah, probably long as well, huh? Well, it can keep trading until 9:30, and then it can hold whatever position it gets into before 9:30 until like 11, until the auction. Essentially, it has to get out before the auction. So we'll see how it does. Yeah, I make $100 per day with this imbalance, but I don't. That would be dishonest. You can't say that. And even if I did, I will never do that. I would just straight up do. You're right. I think it would probably get clicks. I think it would probably get clicks. I hope this trade doesn't just like immediately blow out. It doesn't look very good. This is what Ross Cameron got hit for. If I'm coming in here and I'm saying I make $100 per day with this imbalance strategy, if the average viewer is not also going to make $100 per day from it, then it's deceptive advertising, essentially. So I will never make a video like that. Even if I was making like $10,000 a day, I would not make a video with a number on it. Scalping is the only skill you need in the 2025 market. I don't think that one would hit. I don't know. I do feel that is a different title from any kind of title that I've used. You know what, though? I actually don't think that that's a good title. Because what I have found, generally speaking, is that the thing that attracts people is the thumbnail. And the title is kind of more about, you know, yes, you do want it to have a good clickable title, but you also really need the keywords and things like that in it, right? So with that one, the only keyword I think you get in there is scalping. So that might be okay. But really what it would probably a better way to think of this is what would be a good thumbnail first. And in a thumbnail, you know, you don't want too many words. Like most people do put words in their thumbnails, but you don't want too many words. Just putting a number works great, right? But yeah, I don't like the way this is kind of flipped here. How to lose money fast, S&P edition. That I could maybe do. On the thumbnail, put a Bloomberg terminal picture. You know what I would actually prefer? Okay. My last video that I put out was why economists fail. This will change society forever. Complexity, economics, and agent-based modeling. What I would prefer is, how do we make a thumbnail that will push more views to this video?
Order canceled.
It's flipping around. Well, that's pretty good. It only took a small little loss. I'm liking that with these parameters, that if it's wrong, it sees that it's wrong and flips around relatively quickly, and so it hasn't really taken huge losses. That's good. Maybe it's just not worth filtering. Probably the filtering is probably more like, is this overall a good market where we expect market orders to be dominant or not? And filtering based on that, rather than this whole thing about like, you know, has it been in long enough or anything like that. Yeah, I'll do a video on the carry and how it comply. Well, I could basically just take all the information that's been in like the Zero Hedge articles about that and talk about what happened. But the reason that was the one that we were talking about earlier, where I was saying, oh, I've done those in the past, but then those videos only do well for like a week, and then it doesn't help you. Cut the dividend kept dipping. Okay, so on this thumbnail, if there's a Bloomberg terminal there, would that help the video? Maybe. I guess. I don't know. But think about how we can change this thumbnail. I don't like this face either. I don't know why you picked this face. I do kind of wonder if we've just, our thumbnails, these most recent thumbnails, going all the way back to here, I've just kind of been like not that impressed with. I don't look at the thumbnails and like, oh, that's a great thumbnail, that's got to do well. And then I just go and I look at the performance, and the performance of the click-through rate is just average. So none of those thumbnails have really been like, you know, really killing it. I guess if there's somebody out there that makes thumbnails, I would be totally willing to pay somebody on a per thumbnail basis. Well, anyways, I did not trade on Wall Street. I did work on Wall Street. Or rather, I worked for a big bank. But I was on the technology side. We didn't trade. So I know a lot about how they traded and how their systems work and all of those sorts of things. But I didn't trade explicitly. The Bloomberg terminal will help everyone that recognizes the colors. Okay. We could probably do that for one of those other ones. Where was it? Like best asset classes for trading, you could put a Bloomberg terminal there. This right here, if that was a Bloomberg terminal in the back instead, that would be good. Actually, that's probably the best one, because I really liked this video. I thought it was a good video. Well, this is turning into a pretty good sell. 26.5. I'm kind of wondering if we should stick around until it closes. Let's see. How are we going? Stream has been kind of flat. Well, it's kind of interesting. What were we talking about at 8 o'clock? Because it seems like some people cut out at 8 o'clock on our analytics here. It's like we had a lot of people at the beginning, and then, or was it because we were talking about Europe, they didn't like that? Maybe the problem is just that I do need to say more liberal things. So if I said more liberal things, the people with the money are more liberal, right? Could be part of the problem. Don't go up. Now I think that we will just shut things down, because I got some studying and so forth to do. So make use of the time that we do have. So I will post in the $3 Discord the way that this all plays out in the end. In the meantime, stay